Testing. Welcome back to the end of the day show. I'm your host, Matt Parker. It is Tuesday, July 30th. We are almost at the end of the month, and today we got an exciting show. I'm going to be diving into some of the more interesting stories that happen in tech, in venture, and in regards to early stage startups. From a once hype dramatic pivot, today we talk about a company that has hard times and looks to be trying to find an acquirer, and they aren't the only startup that are trying to find an acquirer right now. But stick around for some more news. Today we want to talk about a company called Humane. Humane is a company that is notorious for building an AI pen. They had a lot of marketing and a lot of jazz in 2023. They raised a lot of capital as well, but it looks like things are not going as planned, and the company looks to be in a position that they may be looking for a soft landing this year. Additionally, want to talk about a company that announced a $13.5 million round yesterday to disrupt the accounting industry. They aren't the first, and I'm sure they will not be the last company to launch an AI-powered accounting software platform. So we'll talk a bit about that team and what they're building. Additionally, we'll talk a bit about the Russell 2000 rebellion. So small caps companies are having their moment. As of yesterday, the Russell 2000 index is up over 9% this month, beating the S&P 500 as well as the other indexes. So we'll talk a bit about some companies that are in that crop of companies and why those companies are doing better than the top line companies. Lastly, are you a millionaire? According to a report from USB, 1 in 15 Americans are millionaires, and that number is expected to increase, not just in America, but across the world. So we'll talk a little bit about that report. But first, a question for you. $105 billion is a massive number. That is the amount of money that Nvidia plans to generate in revenue in 2024. So we'll get into a little bit of the AI hype cycle, and is it real? Is it fake? And what do we expect from these upcoming earnings, as we'll talk a bit about Microsoft on tomorrow's show, as they have an after hours earnings. But a lot is going to be determined on how they are tracking with revenue and the benefits of AI as opposed to the spin. Jumping right into story number one, talking about a company called Humane. Remember Humane? If you do, this is a startup that promised to revolutionize the way we interact with AI through a sleek pen that you put on your chest or wherever on your body. And it was expected that this pen would be able to do everything for you, be able to call, record your meetings, your conversations, allow you to quickly ask it questions. Well, this week, according to the information, they are probably in an acquisition situation. They're actively seeking an acquisition, according to the information, and they brought on John Chambers, who's the former CEO of Cisco and is known as a deal-making veteran in Silicon Valley. In his 20 years at Cisco, he is known for administering over 180 deals. So he has a very strong track record of this. He joins their board, and it looks like Humane is trying to find a soft landing, likely looking to exit for as much as they probably raised or less and move on to work on other things. This is a very significant story. This is a story that's following in the line of many other AI companies. Just earlier, I think last month, a company called Adept, which was a very well-funded AI company, almost did a silent reverse sale where the leading team, the CEO, as well as the executives went on to just work at Amazon, and then Amazon paid for a licensing of their solution. So it's basically a way to buy a company without having to go through the SEC. And it's happened before with another company that Microsoft did. So I'm assuming Humane will look for this. They're unique because they're a hardware company. But again, it comes down to the fact that as much as we want AI, as much as we use AI, there's a lot of questions about the adaptability of the solution and if they're really going to be transformative, once in a lifetime products. The actual AI pen that Humane launched, which I am not an owner of, I think it retailed at around $699. I just never really understood why you would need to wear this in addition to a phone, in addition to a watch. in addition to some other hardware devices like Oura rings that are very popular. I just never saw a need for an additional product to just wear on your body. Also, you have the security and privacy questions, like do people you're in conversations with casually want to be recorded in those conversations? I mean, we're already being interrogated in every business meeting. So now if you move into your personal life, do you want to have those calls recorded, right? And it seems like they also had a very tough start because Marcus Brownlee, who is a very prominent reviewer of tech products online at YouTube, has several million subscribers. So all of his videos are pretty prominent and go pretty viral. He reviewed this product and said it was the worst product that he ever reviewed. And I don't think they ever really recovered from that. And, you know, while he came back and said it was part of a quite harsh review, he felt like he was being truthfully honest about the product. The silver lining in all this, though, and for most founders, and what you can learn from this and what I'm learning from it is they did assemble a very, very talented team, right? People from Apple, Tesla, Nvidia, they were going after a big opportunity. So I think that they will in some way be rewarded for, you know, putting together this great team of people. I mean, these designers that started this company, which I believe are husband and wife, they were very, very prominent and well known in Apple. So while the product didn't work, while they raised a lot of money that's probably going to be pennies on the dollar return to investors, they did build a unique team and that was going after a very unique market opportunity. So we'll see what happens with this company, but I would assume in the next 6 to 12 months, we'll see some form of acquisition or some form of down round where they raise and just try to figure out how to sell the assets. But they do have a pretty relevant team in hardware, and I'm assuming a large Fortune 500 company that's trying to build a hardware product that has AI baked in may look at this deal. Moving on to story number 2, Relit. Relit raises $3.5 million in a fundraising round. Relit is an AI-powered accounting startup, and they basically are doing something that's not new, right? I've been in this accounting and tax space for the better half of the past 7 years. There's been lots of companies to emerge that are kind of saying that they're going to automate away all of your tax and accounting work, your bookkeeping work. It still hasn't happened. I don't know if AI is the answer either, right? There are still so many niche cases of accounting and tax where a human's interaction is almost required to be successful. So I don't think that you're going to fully automate and standardize an automated accounting or closing of the books, but they are trying to solve this problem. I don't know so much of their unique way. Basically, from what they quoted in the articles that I read, they feel that old software built for small businesses doesn't meet the complex needs of these small businesses, which I would agree, right? The way that small businesses make money now is much different than it was 20 years ago. And that continues to be changing with the creator economy, with solo entrepreneurship, with all these unique businesses that are being built. There are different ways to make money as a business. And so they are very much businesses are very much becoming more complex. So I get that. They also said that enterprise solutions are often overkill and expenses, which I also agree with. Why would you pay for a super swanky accounting solution as a small business owner, right? You wouldn't want to pay that much money for something that actually doesn't make you money. So I do understand the fact that there is kind of something that needs to be built in between a basic QuickBooks and expensive NetSuite product that is built for larger enterprises. And so that middle market is a very large market. Because the catch to this, though, is the automation of accounting. All of these companies generally try to sell automation as the key, right? Where I think that automation, while important, isn't the full picture, right? It's not as simple as a lot of these founders tend to make it out to be, right? There's a lot of things that go into automation. There's a lot of these niche use cases. There's a lot of these questions about how this stuff works. So there's not always a clear and evident way to automate everything, even for a very small business. There's a tweet from Sasha Orlaf, who is a founder in this space. I don't know if this tweet had anything to do with his position on the new company coming into his territory. There's several of these companies. If you're driving and you live in San Francisco, you're driving down the 180 or whatever, you'll see a company called Digits, which is another company that's raised several millions of dollars to kind of automate this accounting world. This company Puzzle, which Sasha Orloff runs, they are trying to do that as well. A company called Puzzle, and there's a few other ones. But AI will never fully replace accountants, but it can enhance them. So my take is that I think this market is, like, again, it's a market where it seems to be, even though I haven't been able to crack the egg of raising massive amounts of capital for accounting and tax startups, but I do think there is a question around the difference of selling these products to venture capitalists as a big vision, because it's a massive market and everybody has to get their books or their accounting done if they're a legit business, as opposed to selling these products to the small businesses that actually need them, or through the accounting and tax firms that are going to, white label them. There is a question if these firms will ever break into thinking that you can automate away portions of their jobs. So we'll keep an eye on this company. They raised a hefty round. I think this is their Series A. So 13.5 million to go a bit further. So we'll look to see how well they do. Moving into our next topic, talking about the Russell 2000, which is a high-performing index of companies. These are your index. These are companies like your MicroStrategies, your AppFolios, your Squarespace, your Asana, companies that are generally south of $30 billion in market cap, most of them in the $1 to $10 billion range, not S&P 500, not your Magnificent Seven level, but it seems to be where a lot of investors are tending to park their money these days. As we report, there's about a 9% uptick in this index in July. And the signs are that companies of these sizes are being, invested in more because there's more upside. And that is kind of essentially what this market signal seems to be. As a founder, as an investor, it is interesting to think about where the next play is going to be, right? What are the next slew of companies that are going to break out, that have become big? And you think about it, a lot of them might already be in this batch, right? So I think a lot of investors are thinking, all these other, growth stocks are overpriced in some cases, and they may be seeing haircuts. We'll see, big announcement from Microsoft today, Meta tomorrow, Amazon, I think, on Thursday. So there's a lot of this will be discovered, or where the Magnificent Seven is going to go. But it seems like this Russell 2000 batch of companies has a lot of upside. Also, from a founder perspective, if you're selling enterprise, most companies, they like to say X amount of the Fortune 500 uses our product. That's always kind of like a sexy sale. If you're, trying to appease to investors and just kind of prove out that your product is being used by large, massive companies. You think about the Russell 2000, there's still some very good logos in that Russell 2000 of companies. And if we see their stocks improving, we see those companies might become more advantageous to buying new solutions. So it may be a selling point if you're building an enterprise product where you think about the Fortune 500, which is pie in the sky for a lot of founders. Maybe you come down to this Russell 2000 batch of companies, try to sell to them, and they're growing. You put yourself in great situations. So be interesting to watch this index and see how it performs throughout the rest of the year as it, kind of compare it to the S&P 500. Another story that I wanted to report on today is a UBS wealth report highlighting that 1 in 15 of Americans are millionaires. Yes, you heard that right. And that is actually down 3% from 2022. But the kicker is that the UBS expects it to see a 16% growth moving forward. So really, what does this mean? What does this mean for you in your life? Where are you at on that, rank, right? Like, what do you think about it? Like, I'm in this tech startup ecosystem. It's very much paper money. You could technically, if you own, 10% of a company valued at $10 million and you raise $2 million, technically you're a millionaire in terms of like the value of your company. But the problem for most startup founders is you get that $2 million. That money is for operating, paying yourself a salary, paying your team, and you're likely not making a lot of money. So you're not valued at 10 million based on the fact that you're actually your revenue. You're valued at 10 million based on the fact that a venture capitalist said, hey, this company's valued at 10 million. We're going to invest 2 million. Each founder or the founder owns 10% of the company. Maybe you hopefully you own more than that after two on a $10 million round, but technically you're a millionaire. So I would love to know how UBS thinks about what is a millionaire, because categorically, if you raised any amount of venture capital at any valuation close to 10 million and you own 10%, you're technically a millionaire. The other side of that, though, is the liquidity problem that we're seeing. And I've talked about that last week, where even startups at the peak of their powers who've raised at hundreds of millions of dollars, billions of dollars in valuation, there's no liquidity. The IPO market is very slow. Only if you're a creme de la creme, top company, hype, can you get a very good secondary round. So many times, all this equity that people are accruing in Silicon Valley, it doesn't really have any paper value until they're able to exit. So I'd love to know if UBS looked at that case study, because if you break that down, how many like paper millionaires there are versus liquid millionaires there are, it might be different. But it is also a very good signal in the market, because I think a lot of people are feeling the constraints and the confinements as we see credit card debt is rising high. If you think about it, maybe things are going to get better. Agnostic to whatever happens politically, it looks like this report, wealth is going to continue to be created here in the US as well as other places. So it's interesting to see how wealth continues to map to debt and all these other things. But I thought it was an interesting report that I came across. Lastly, so that concludes our show today. I wanted to talk a bit about two things. A new project I'm working on called First Meeting AI. That's firstmeetingai.com, where we're focused on understanding AI spend trends in enterprises. So if you're a founder, if you're an investor, or if you're curious about where the AI money is actually flowing. Like, remember at the top of the show, it talked about the $105 billion that Nvidia is going to generate this year in revenue. Well, where is that next $100 billion going? And where is that next $100 billion after that going? So that's at First Meeting AI. That's what we try to focus on, and we're trying to learn a lot. So if you're a founder, if you're building an AI product, if you're an investor and you're investing in AI products, or you're just generally curious about it, if you're a spend manager or you're trying to think about budgets, would love to have a conversation. Also, don't forget to subscribe to the general newsletter that goes out along with this podcast every day, 4 times a week at stretch4.substack, where we get into the actual data behind a lot of what I'm reporting on, as well as some other things. And we're looking to launch a subscription version of that newsletter and this podcast, where we're going to get into some deeper discovery. One other thing that I'm doing as well is the Raising Venture Capital. So if you go to raising-venture-capital.com, you can sign up there. This is primarily for founders that are raising anywhere between $1 and $2.5 million. All the news, all the new funds, all the lead lists, everything that kind of categorically can help you raise your funding more efficiently. I just put out another resource yesterday where I looked at 25 of the top Black-led venture capitalists right now, with all kind of insights on who they are, where their fund sizes are, what their trajectory is. So check that out. All that'll be linked to here in the show notes. But again, thank you for joining me. I'm Matt Parker, host of this End of the Day show. It's been great being with you today. Hope everybody had a great day. Let's get to it.